So I'm going to look at books of original entry, and I hope after this lesson it will be very easy for you. So let's just go quickly to the accounting cycle. So with the accounting cycle, we have source documents. We move on to our books of original entry, otherwise called the journals or the day books. And from there, we move on to our double entry, otherwise we know that as the ledgers, right? So when you did your T accounts, when we move on from double entry or ledgers to the check arithmetic or the trial balance. So we're checking to see if our double entry was actually correct. Then we move on to our financial statements, which is the profit and loss first, and then the balance sheet. So you must understand this. So we're going to do this part now, the books of original entry. All right. It's called the books of original entry because that's the very first place or the very first books that the entries were actually made. Of course, the information that goes into the original entry in the books comes from the source documents. The documents are not books; they're just merely things like like your receipts, your invoices, and so on. And that brings us now to the transactions. So transactions can have two natures. It can be credit transactions where you buy things on credit or you sell goods on credit, or you can do the same thing. You can buy or sell with cash. Now, for the books of original entry, the journals or the day books, we are concerned with the credit transactions. And let us differentiate. Credit transactions means that if you sell goods, you sold them on credit, meaning you did not get any cash at the time of transaction. If you have credit sales, you can also have credit purchases, which means you can also buy goods without paying for cash at the time of a transaction. With cash transactions, they should be an S here, you use receipts. So at the time of transacting sales or purchases, cash was received or given when the goods were bought or sold. So for the source document for credit transactions, we normally say it's invoices. And for cash transactions, we know it will be receipt. It could be whether it's online or in person. So receipts, checks, and so on. All right, now let's zoom in a little bit more. Now, for the credit transactions, we can record in sales journal. So if you sold goods on credit, that would go to your sales journal. Now, in the event that you sold some of the goods on credit and your customers brought back goods to you, that's called return inwards. There should be no T here. And the return inwards, then return inwards journal would then record the information. Then move on to our purchases journal. And our purchases journal would record all the information of the goods we bought on credit. And if we return goods to our suppliers, we use the return outwards journal. So pretty much remember that. Of course, there are three ledgers. We have the sales ledger, the purchases ledger, and the general ledger. So from the transactions, all of them will then go into double entry. So from source documents to the books of original entry to the ledgers. All right, so let's look at the question real quick. So this says we should complete the books of original entry. And we have the date here. So let's look at the journal. So we have sales journal, purchases journal, return inwards journal, and we have return outwards journal. And then we'll have the ledgers. So we have the sales ledger, and we have the purchases ledger, and lastly, the general ledger. Let's start first with sales. All right. So we are not concerned about the cash sales or the cash purchases now, because what we're going to do is actually the credit transactions. So for the journals to ledgers. So let's look for the sales, those for sales journal first. So if we sold goods on credit. So January 1 would be out. That's where we are buying goods. January 3 would be out. That's cash sales. January 3, we sold goods on credit to J. Spencer. So that would fit the criteria here. And also sold goods to Y. Samuels, $1,500. So these two transactions would fit the profile. So we'll put the date as you know. So first thing first is the year. And we have January 3 and January 5 respectively. And the details. So we sold goods to J. Spencer. And we also to Y. Samuels. Now for the invoice numbers, sometimes they may give you this. And normally tell my students just create the numbers if I don't give them. So we can just put 1001. If you want to put 111, if you want to put 10, it's up to you. Now the folio tell where it is going. So remember, we move from our books of original entry, the journals, to our double entry, the ledgers. So it is moving from sales journal, it will then go on to our ledger. So we'll put SL and you can give it a number if you wish. Now, what are the totals? So $3,000 for J. Spencer and $1,500 for Y. Samuels. And now we get the total. So the total would be 4,500, and we're going to double line this. And for the description or the details, we would put transferred. When I spell transferred correctly, transferred to sales account. All right. Let's go to the sales ledger. So then the sales journal to the sales ledger. Now there are two persons who we sold goods to on credit. And people who sell goods to on credit, they are called debtors. So our two debtors then would be J. Spencer account, and the other would be Y. Samuels. All right, so they are debtors. So we do record, these are debtors, and debtors are assets. And when assets increase, we debit. When assets decrease, we credit. So we're going to debit our debtors account because now they owe us money. So 2024, and the date for J. Spencer was January 3. The details would be sales because we sold to them. The folder here tells where the information is coming from. And this information is coming from the sales journal that we did before. So we put SJ, you can give it a number, and it should match back. And then with the amount of money, we would put the $3,000. And we do the same thing for Y. Samuels. So the date 2024, January 3, the details, as we said, would be sales, folio, coming from the same sales journal, which you can give a number if you like, should be the same as the one here. And then the amount of money would be 1,500. So now remember, we did the sales journal and we have the transferred to sales account. So we did the sales journal. We also, let me get back my spotlight. We also went on and we did our sales ledger, which has all the accounts of our debtors. So we debit their accounts. And then we're going to go on to the general ledger for the sales account. So we're going to have sales account. And tell me, sales are always what? Debited or credited? It's always credited because stock is moving outside of the business. All right. Double entry does not change. So to 2024 and the date, we put the end of the month, January 31st. Let me just give some space so it can come back inside. And then the details, let's put total credit sales. The folio, it's coming from the sales journal. Remember where we had it? So we'll put SJ, and the total was 4,500. And that's how we do the sales journal and the ledgers.